HELOC Mortgage Solutions. Sorry, I didn't have a deck put together, but what we do is pretty simple, so I thought I'd just start with our webpage and kind of go over a little bit about some unique solutions outside of traditional mortgage that are out there and really underutilized in the marketplace. I've been in the mortgage business for about 15 years. This is my 16th year, mostly as an originator here in the Dayton, Cincinnati market. And Angel Oak has been around since 2013. They came out of the back of the crash of the non-QM, or the subprime days. So subprime is kind of what things used to be, right, before the big crash. Non-QM is a highly evolved version of that. The loans that we're writing today that are alternative to Fannie, Freddie, conventional loans, government loans, are actually showing a default rate now. Loans we wrote in 2013, 2014 are showing default rates of under 1%. So we're proving that these loans are not only usable in the marketplace, but they're actually responsible loans in the marketplace as well. What we do that helps investors, that helps people in this room, I'm sure everybody in here has heard of a DSCR loan, right? Cash flow loans for investment properties. One of the big things we do that's unique, and you may question why this is even needed, but we'll actually do a negative cash flow loan. You could have a property with negative cash flow and we'll still lend you money on that property. So if you find that perfect property, you have enough money to do the rehab, make a down payment, but maybe you don't want to buy it cash right away. We'll let you do a negative cash flow loan on that property to go in and do the rehab and get it cash flowing appropriately for your portfolio. We will also allow you to do a home equity line of credit attached to any investment, primary or second home based on profit and loss income for self-employed individuals. Up to 85% of the value of that property on investments in second homes and up to 90% of the value on primaries. So if you want a cash line access, cash equivalent, that's a product that's out there as well, qualified off of non-traditional income, no bank statements. We can do it off of tax returns, but we primarily do it off of bank statement income. DSCRs can help you in a lot of ways. That negative cash flow is a really important point. And there's some interesting pieces that I can get you. One of the things where we are a little bit different is I'm here talking to you guys to educate you on the product, but I can't help you directly as a client. You've got to go to a mortgage loan originator and they've got to come to us and be signed up, or what's called a wholesale bank. So we wholesale loans through mortgage originators. You guys have to go to that loan originator. If you need a referral, you can certainly call me. I know plenty of people that offer the product. But I'm just trying to get the product out in the market because we're seeing extremely low utilization of some of this stuff. The other thing that we can do is if you get into short-term rentals at all, which we don't have a ton of in Dayton, but if you're looking to invest across the country, if you're finding areas like Panama City, Florida, Destin Beach, areas with big short-term rental, we'll actually use the AirDNA rents for short-term rentals. And right now, I don't know how many of you have tried to use short-term rentals on an appraisal recently. There's a big pushback where appraisers are not doing short-term rental calculations anymore. So it's becoming an issue on some of these properties that have a higher mortgage payment, perfectly cash flow on an Airbnb rental, but they don't cash flow at all on a traditional 12-month lease agreement. So AirDNA is a way around that. They actually pull their data directly from Airbnb. So there has to be enough Airbnb data for them to pull that data through and get a factor. But that is a way around the traditional rent calculations. So let's see here. And then for anybody else in the room as well, if you're self-employed, not just a property investor, you can look at buying that first investment property, that first rental property, through your business bank statements as well. So if you run other businesses outside of your rental programs, there's the ability to use a bank statement qualification where we really only care about deposits into the bank account in terms of income. So we don't care what you've done on your taxes. As a matter of fact, I don't want any taxes in the file at all. I don't want to see a single piece of tax documentation in the file. So we're doing it on real deposits. We do take an expense ratio, so things get a little bit more complicated than that. But overall, a pretty straightforward loan. Credit-wise, We're going down to a 640 credit score on most of these products, depending on loan to value, but down to 640 is possible. Some talk by the end of the year we might be down to 620. I don't think I ever see us going below that just because of overall portfolio risk. The other thing is, by the end of the year, we plan to be able to launch a product for 20 units and under, so light commercial apartment buildings. Being able to do more of an actual mortgage loan than a commercial loan on 20 unit properties. So we're going to be opening that up to the market hopefully by the end of December. And if you have any questions, I'll keep it short and sweet, but I'll be here for the rest of the meeting. And I thank you for your time.
Greater Dayton REIA is a great source of information for real estate investors. You can learn what you need to do to succeed. You can learn the different opportunities that there are in the marketplace, and you can meet a lot of people that know about this from their own experience.
It's a fantastic organization because you can network with more seasoned investors. You meet all kinds of different vendors each time. Insurance companies, title companies, there's always a different group of people here. And even though I've been involved in real estate since '99, every time I come to a meeting I learn something different. You could also find contractors here. It's just a really great way to network.
The benefits that I've gotten from Greater REIA over the years is being able to tap into a pool of knowledge from experienced investors, experienced speakers that allow me to overcome any obstacles I might have from what I'm not familiar with.
In REIA, we learned that this is a team sport, and being a landlord requires quite a few people to help. In REIA, we found our accountant, attorney, property manager, realtor who furnishes the leads for the properties, and I believe the appraisers.
REIA in 2010 to invest. The whole team was there. I had a property manager, realtors who had deals, and now I have 4 houses that are all turnkey solutions. I've invested in private LLCs. I didn't bought a note. So by joining an organization like GD REIA, you too can learn how to be a good investor.
We are an approved vendor with GD REIA. We've been with you guys about 4 or 5 years now, and we love networking with the members, and we're here to help. So anything that they need help with, you can find us here every meeting and ask us whatever questions you need to.